Just connecting to live stream, getting things coming along, getting things going. All right, here we go. That's that. That's that. And we are live. Good morning, David. Good morning, Brian. Good morning, good morning, good morning. Happy Wednesday. Happy Wednesday. Let me go ahead and share my screen. Otherwise, it's going to be a very boring hour, right? Can you imagine just staring at my face for it? It wouldn't be pretty. All right, here we go. And where we stop, nobody knows. We got Wayne. We got Brian. We got David. We got Terrence. Wardog is in the house. Yay. J.O., Timothy, Cam. Now we got to get Moondog. Well, David, Ed, Motown guy. Motown guy. I like that. Roddy. Hey, Roddy. Good morning. Zen Master. Carrie. Edward. Gaston. Dave. Robert. Omar. Robert. Michael. Rachel. Penny's in the house. RP's in the house. Delroy's in the house. Angie's in the house. Bancroft. Somebody who's writing in Chinese. I don't know what your name is. I don't read Chinese or Asian. I don't know what language that is. Diana. Henry. Michael. Michael says you're never boring. Well, thank you. George, Robert, Cecilia, Duzzy, Rebecca, Dennis, Peter. Peter, good morning. No more giving away. I told Peter the other day, I gave him a tongue lashing for giving out the stock that I had in the pit. And then what did I do? I gave it away yesterday by accident. Peter, I'm just as bad as you. I wouldn't make a good agent. I would not make a good secret agent. Carlos, thanks for the wonderful week. Without your guidance, has been in a pickle pit and other programs are working well. Thank you, Carlos. I appreciate that. Elizabeth, JB, Dr. Serena, Tom, Atlin, Randy, Moondog, post-surgery. Moondog, how's it coming post-surgery? Our prayers, fingers, toes, everything is crossed. Alan, Kenny, Eagle Beagle, good morning. I responded to your question from this morning's email, Eagle, by the way, just so you know. Stephen is back. Thomas is in the house. All right, folks, don't forget, the Cam and Gustavo show is going to be live from 9 a.m. Actually, from 10 a.m. From 10 a.m. to 1 p.m. every single day Eastern time. Please correct me if I'm wrong, Cam, but I think it's from 10 to 1, right? Also, don't forget, I have a new class today where I'll be giving away some goodies. Here is a link for you. That's happening at 1 p.m. And then here's the link for my VIP room where we have some fun. Today, hopefully, I'll have an earnings scorecard, which I'm really eager to share with you guys. We'll have all that. Carlos says, no, you said a name, but someone else identified as the one. You're clear for any. All right, I'm clear. It's all good. I mean, really, it's I don't want to make too big out of it, but it happens. Joe just became a diamond member, hoping makes me happy and money in the next couple of months. I hope so too, Joe. I hope so too. Steve from Virginia. Yeah, 10 to 1. Cam and Gustavo show. Perfect. All right. We've been here for 3 minutes. We have over 200 people. You know, when we started, it would take us almost an hour to get like 300 in here. And we got 228 in like 3 minutes. Oh, okay. All right, Eagle. We'll see you later. I hope you have a great day. All right. All right. Good morning, Gustavo. I hope you are well. And folks, try to make the VIP room today because the market could be setting up for something really juicy. And yes, Moondog, we wish you a very, very speedy recovery. Let's look at the market today. Let's get into all of these goodies. Maybe Clyde will stop by to give us some assistance. Carlos, what I need to do is I need to start having a webinar for Diamond members every couple of weeks, like a half-hour member, so I can keep you guys out of correlation trouble. I'm going to start scheduling those. I figure it's enough for what we do here so far, but I think it would be great to have an extra half hour for the Diamond members. So I'm going to start scheduling every couple of weeks to do that. Good morning, Richard. How are you? Dylan, Art, Alan. All right, let's begin. We got a lot to talk about today. We really do. This is in the place. Good, Moondog. All right, so the Nasdaq is up pretty good, about 233 points. The Dow futures are up 314 points. The S&P's up 57. This looks very, very healthy so far. So far. Good. Good, good, good. So far, so far, so far. Now, remember something. This is the little picture. We got to look at the bigger picture, okay? At the bigger picture. Let me give you an analogy, okay? This is a sad story. This happened about 15 years ago when my grandmother, who passed away many, 2 decades ago, she got I want to tell you the story. It's a good story. I've been meaning to tell you the story yesterday, okay? Yeah, right, Eagle. Yeah. Kathy Wood stocks could soar 221%. Yeah, when the pit has a win rate of 50%, that's when Kathy Woods is going to soar 221%. Let me tell you a story, okay? It's a very important story. I regretted not saying it yesterday in the VIP room, but I'm going to share it with you now. True story. Cedars-Sinai Hospital, one of the most famous, popular hospitals where Michael Jackson was taken in Los Angeles and in West LA where we lived. Grandma had sepsis. She got infected and she had sepsis. She was 80-something years old. We were in the hospital, and my aunt, her daughter, came in there, and they're like, well, what are the odds? What are the odds if you operate? What are the odds if you operate? What are the odds? She kept asking that. And the doctor kept telling her the odds are really good that she'll be okay on the other side. But then the doctor kind of he was leaving, and I said, "Hey, doctor, can I have a couple of words with you?" Because he saw how emotional my aunt was. This is a true story. I want you to remember this story. And the doctor, I said, "Doctor, look, my aunt's really emotional. My dad's really emotional. Can you talk to me? You know, I'm a little He's like, let me be very honest with you. They're not asking the right question." I said, "What do you mean they're not asking the right question?" "Well, they're asking if she's going to be okay from the surgery. What they're not asking is how she's going to be a month from now, or 3 weeks from now, or 2 weeks from now." I said, "Oh God, that's awful." I said, I got what you're saying right now." Well, guess what? Grandma had the surgery. She lived in misery for 3 weeks, and then she died. The problem is a lot of you guys don't ask the right question. See, that's the problem. You got to ask the right question. If you don't ask the right question, you're never going to get the right answer. One of the reasons why I spend a full hour here with you is so that I can block you from asking the wrong questions as much as possible and give you all of this data. If it was just me doing a review, I could probably do this in 20 minutes. But there's a lot of people who are asking the wrong question. So one of the biggest things that I have to do, and one of the reasons why I have to be so repetitive, is I'm trying to take your head and move it in the right direction. I'm trying to take your body and move it in the right direction so that you could start finally asking the right questions. And I'll tell you why. If you could start asking the right questions, then you will have 10 times easier time navigating the markets. A lot of you are not asking the right questions. The way I set this up every morning methodically is so that we face those questions head on. And that's what's making you a better trader. It's because you're starting to focus on things that are really relevant, not things that you think are relevant. Okay? Yes, one of the biggest mistakes in America is people asking the wrong questions. So one of the biggest things I'm trying to do is, and you know, part of this had to do with the fact that I graduated from law school. In law school, they teach you a rhetoric method of asking questions. You're supposed to ask questions to get other people to think. And I guess I was in law school for many years. So I kind of tend to do work that way. So if you guys are trying to understand why I have this methodology, it's because I'm trying to get you guys to think for yourself and to ask the right question. And I think after you start asking the right questions, your market approach is going to become 10 times easier. War Dog, I was in Cedars-Sinai Hospital in ER in LA with a kidney stone while on vacation, trip to London, unbelievable care center. Yeah, unfortunately, that's where every one of my relatives died in the last 50 years. But anyway, that's my local hospital. That's where I grew up. It's the only hospital I think I've ever had anything done at. Anyways, but my point is, You guys have to write. That's why I go through all of these things so we can focus on what's really important. Okay, so let's go through that right now. But again, you have to ask the right questions. If you don't ask the right question, you're never going to get the right answer. Okay. On that note, let's begin. Crude oil is starting to come up. This is notice crude oil went below the 200-day moving average, and crude oil came to support. The fact that crude oil is coming up is actually a really good sign. Fred, everything I'm doing is an example of those questions. Watching the forest from the trees, looking at the bond market, not looking at the stock, but looking at the sector, looking at momentum levels. That's what I'm doing every single day here, Fred. Everything I do is an example of that. And what it does is it makes you focus on what really is important and not some cockamamie stuff that you'll hear from CNBC. If you could really focus on if you can open the market up and do this, then you're about 80% there. Yes, often you don't know what you know, and you don't know how important it is. So, Fred, it's not something different. It's the way we go through this. It will start having your head next time when you look at a stock and you say, hey, let me give you an example, Fred, okay? Next time you look at a stock and you say, oh, I want to buy this stock. What you may think is, well, what sector is it in? Is the volume high today? What's volatility doing? Good morning, Richard. What's volatility doing? What are the bond market doing? What is crude oil doing? Am I looking at a tech stock? Should I be looking at the NASDAQ? Should I be looking at SMH? Are the key levels there? It causes you to ask questions. And if you start doing that every single day, you will have such a better understanding of the market. Good morning, Rochelle. Like Rochelle has been with me for a few years now. Rochelle, would you say you have a better understanding of the market and are more careful now than you were, say, 5 years ago? Exactly. Find the real reason why things are happening. And more importantly, stop connecting dots when there shouldn't be any dots. Like yesterday, the first thing we read in the report said that the market is now getting back because the ISM report was good. What the fuck? Really? That has nothing to do with it, okay? Good. It's starting to work in your brain. Good. So the fact that energy prices are coming up, the fact that energy prices are going, good morning, Frank, are going up means that we have less fear of a recession. Now, the only problem is we're still below the 200-day moving average. We're still below key value areas. We're still below all the value area. We're below value. We're below the 8-day EMA. We have a lot of work to do to get up here. So here is the question you should be asking yourself today, Frank. Will the market continue being bullish? Here, let me pull up the E-mini S&P. For example, this is the E-mini S&P. Will the market, and by the way, if you look at crude oil and if you look at the S&P, they don't look all that different. Look, big knockout, starting to consolidate and come back up. E-mini starting to consolidate and come back up. The $1 trillion question is, well, see, Rochelle didn't say recovery. She said bounce. You see that? Bounce. Well, here's the problem. We're still below the 8-day EMA. We're still below the 100-day moving average. So let me go back to crude oil. I'll get into the stock market. The point is this, and remember what I said yesterday? Ask yourself, if the market turns back down from this point where we're at right now, how will the chart look? Will the chart look weird, or will the chart look like a perfectly bullish, bearish trend? So a bounce, is it a bounce or is it a reversal? So far, we don't know. But so far, this can easily be a bounce, and this can move lower from here on, and we wouldn't be any wiser. So we are moving in the right direction, but we've got a long ways to go till we get there. So the question to ask is this. Now, here is a real question. How much positive data are we going to get on the economy before the next down route comes? Are we going to be up here before the next negative news comes? Are we going to be up here? Are we going to be up here? That's the question you should be asking right now. How much more upside can we get before more negative data comes? Are we going to be up here? Or are we going to be up here? Because here's the problem. And again, I don't mean to get into the S&P. I just know you guys can relate more to the S&P, so I'm putting it up here. But let's just talk about crude oil. So the question is, how much more good news? Remember, we really haven't had any good news. We just haven't had bad news. So to me, this is just a relief rally. Nothing has changed fundamentally. The earnings on FANG stocks and tech stocks have not improved in the last 5 days. So my question is, how much more of a relief rally are we going to get before reality sets back in? Now, if we're above the 200-day moving average, okay. Well, if we're above the 200-day moving average, then we can bounce to the 200-day moving average and go higher. But if we're below the 200-day moving average, we can go all the way up here and still bounce, and it would still look like a bear market, right? I'm just saying. So that's what I'm saying. That's kind of what I mean. That's kind of what I mean, Fred. Asking the right question. The question isn't, is crude oil ready to go up? The question is, will the crude oil go up to the 200-day moving average before negative data takes it back down? Do you see how I just changed the question? There's no catalyst. What's the catalyst? Ask the right questions. All right. So gold. Well, gold is doing really well. It's near the 50-day moving average. It never really lost anything. And I'm not really becoming that bearish on gold. Why? Well, gold never broke the 50-day moving average. It never went to the 100. It never went to the 100-day. It never went to the 200-day. It's literally at fair value right now. I don't know, Alan, and I don't care. See, it doesn't matter. It's not going to help me trade crude oil. What's going to help me trade crude oil is knowing whether it's waiting for it to get to the 200-day moving average so I can determine if it's going to be a bounce or if it's going to defend itself. Now, with gold, we don't have to worry about that because gold is already above the 50-day moving average. So gold is back in play right now because it's above the 50-day moving average. If gold goes below the 50-day moving average and stays there, it will not be in play anymore. Okay, I don't look at copper because copper is not an inflationary sensitive stock, Thomas. I would rather look at ticker symbol FDX and stocks that deal in copper. I don't want to turn this into a commodity session. And if I really want to look at commodities, I can just look at what's that ticker symbol? DC. Do you guys remember what's that commodity ticker symbol that we look at? I forgot what that ticker symbol is. It was a DMC, the one that tracks commodities. If you guys remember what it is, let me know. It's a commodity index. So we're above the 50-day moving average. We're right just a hair below the VWAP. Not really anything crazy there. So I'd like to wait a little bit more, but I mean, as long as we're above the 50-day moving average, that's pretty, we're near fair value here. DBA, thank you. If you want to look at commodities as a complex, just look at this. Thank you, guys. I appreciate that. Thank you. Yeah, FCX, right. Thank you, Rochelle. If you want to see commodities as a whole, this is where we have to look. So again, and remember, commodities went down because we had a fear of a recession. And DBC too. That's the commodity index, DBC and DBA. So commodities are not, thank you guys. Commodities are not really rocking and rolling just yet. That's it. That's fear of recession. Fear of recession. And DBA, which is the agricultural commodities, we are still kind of in this area. So no soup for commodities just yet. But crude oil is starting to move up. I like what I'm seeing here. We have crude oil inventories today too. Yeah, I like DBC better. DBC is better. I like what I'm seeing here, but again, we're below the 200-day moving average. So automatically, I would be looking to sell right now, not to buy. Once we go above the 200-day moving average, I would start asking the different questions. Just look at GLD real quick. This is the cash asset. Yeah, like, same thing above the 50-day, right below the VWAP, nothing crazy here. But notice gold did not take a big dump as a result of this, which means gold shouldn't react too much on the way up or down because it wasn't a catalyst for this. And gold is a defensive commodity, which shouldn't really go down even if we see. Here's the thing about gold, guys. Gold is good in an inflation and gold is good in a recession. So gold is one of the few things that's good. Now, I want to tell you guys something interesting. A few years ago, folks were talking about crypto being gold, and we are seeing right now that crypto is not acting like gold. Crypto is acting a lot more like tech stocks. So, and again, remember what I said, the more mature an asset gets, the more it will start acting like any other asset. So that all that stuff that you guys really loved about cryptos, it's kind of moving to the wayside. It's getting regulated. It's becoming it's becoming a lot more liquid. Coinbase, all of these things are going to take the glister out of it, and it's going to be like commodities. Look at commodities 20, 30 years, 40 years ago, and look at commodities now. They used to do this. Now commodities kind of do this. Okay, bond market. Well, bond market is starting to cool off. Okay, we're starting to see some signs that the stock market that confidence is coming back into the market. We're still above the 8-day EMA. We got to get below the 8-day EMA, and we got to get back below the 112 level. Till we do, I'm still going to have heightened suspicion that this market is in a bearish route and not in a bullish route. So the key level, the first level is 113 and a half. The second level is about 112. If you look at TLT, which I know a lot of you guys look at, which is fine. You don't have to look at the bond market. You can look at TLT. You could see that we're all the way down in this area. The level we need to break is 95, 94.70, 95. We need to break 95. We're still at the 8-day EMA. This can just as easily start coming back up right now. Okay, so I like what I'm seeing. I'm starting to get a little more optimistic about the market, but I'm very nervous because the levels are not back to normality yet. Same thing with volatility. Volatility is not below the 21 level, this line. We need to have it below this line, and then we need it to have below 15. Till VIX comes below 15, we're going to have heightened suspicion of going bear. And again, we are still in danger zone yet. Nothing has changed. We're still in danger zone. And while we on the topic, as a chip stock, which is Sun Microcomputers, which is influential for AI, is down 14% on the day, breaking lows. So again, this could put a hamper on the market. Don't get all warm and fuzzy just yet, okay? Don't get warm and fuzzy just yet. So that's the commodity complex. Futures are doing really good right now. Crude oil is starting to come up, but again, we're below the 200-day moving average. Gold never went below the 50-day moving average, so it's not here nor there. I would just prefer to buy it above the VWAP, but again, it's not here or there. Bond market, I like what I'm seeing with the bond market. If things continue moving favorably, Mark says, does an increase in bond directly relate to a drop in stocks? Does an increase in bonds? Yes, it does, because Mark, great question. So, Mark, when we're having an inflationary period, it does not. But when we're having fear of recession, and this is why I mean you have to ask the right questions. Nathan, I will in about 30 seconds if you just give me a second. And you do too, Nathan. You see, Nathan, I gave you this sheet on Monday. Today is Wednesday. And all you have to do is come up here on the sheet, you see, and this sheet should have does it have it or not? Huh. I don't see it here. Well, you might have gotten me, but I'll look it up. I'll look it up in a minute. I thought it was here. Where the hell is it? Hold on. Here it is. 8:14 right here. Here you go, Nathan. By the way, I gave you this sheet on Monday. Does anybody not have this sheet? Does anybody not have this sheet? And remember, Cam and Gustavo show from 10 to 1. Here's the sheet if you guys don't have it. You should all have this sheet by now. I gave it to you on Monday, so there's no reason for anyone not to have it, okay? All right. Those were the expectations. All right, let's talk about the whole. You're welcome, Nathan. Let's talk about the big picture before we. Oh, so somebody asked me a great question. Mark, you asked me a great question about bonds. It depends. If the market is thinking inflationary, when stocks go down, then money will just be put into non-inflationary stocks, like going from chip stocks to blue chip stocks, which is what we saw 2 weeks ago, 3 weeks ago. But then when the market starts thinking recession, that's when money goes from the stock market into the bond market. That's called flight to quality in the second degree. The first degree is from going from speculative stocks to defensive stocks. And then the second is going from defensive stocks, just selling chip stocks and all that crap, and going from like Kraft and AbbVie and Johnson Johnson and, you know, Philip Morris, going from those stocks to the bond market. So there you go, Fred. I just posted it a second ago. Okay. So it depends what the market, again, you have to ask the right questions. You got to ask the right questions. You don't know how to read and decipher? This is the estimate. Okay, let me show you how to read and decipher. So Avis budget rent-a-car estimate is 249. EPS, if it comes in at 260, that means it beat earnings. If we have 220, it means it didn't beat earnings. If it beats earnings, it means it's doing well, assuming that revenue is good. And if it doesn't beat earnings, that means the stock will go down. So you want EPS to be above this number when they report. All you have to do is look at this number and look at the EPS and if it's higher or lower. This is the EPS. You understand? Higher than this means outperformed estimates. Lower than this means underperformed estimates. I couldn't make it easier for you. Yee, we got 451 in here. Dr. Serena, the bean counter. Thank you. Our personal actuary. All right, let's talk about the whole market and let's see how much BS they're posting our way today. So again, the answer to your question, which is a good question, Mark, is dependent on what the market is feeling. If the market's breaking the 200-day moving average, then the market's probably thinking recession. If the market's thinking recession, bond market. But if the market's making all-time highs and there's a little pullback because tech isn't doing well, then it'll just go into a different sector. It's not a clean answer, but I hope that makes sense. Yes, Blake, EPS, earnings per share. These are EPS estimates. See, earnings estimates, EPS. Yes, it was. Okay, let's continue, guys. Bank of Japan ruled out further rate hikes while the markets are unstable. That's helping global economy get a lift up. NVIDIA got upgraded, which is very, very positive for chip stocks. Let's see how NVIDIA is doing this morning, pre-open. I'm just curious. I'm just totally curious, like you guys are. Up 2%. Nothing really crazy, but NVIDIA is now trading above the 100-day moving average. That's very positive. Very, very positive, okay? Caterpillar rose 3%. Very, very positive. So we had two good reports, one from speculative stocks, one from blue chip stocks. No problem, Manuel. No problem. Economic data showed that U.S. trade deficit widened. Notice nobody even talked about this. Next thing you know, the bar chart is going to be telling us that this is what caused the market to go up yesterday. I mean, some nonsense. It didn't. I'm joking around, but you guys get my point. Trade deficit widened. All right. It's been widening forever. Meanwhile, they're pricing in a 36% chance of a 25 basis point rate cut and a 63% chance of a 50 point. I don't think it's going to be a 50. I think if we get one in September, it's going to be 25. And the Fed is not going to have an emergency meeting or anything like that. You see, if they had an emergency meeting, it would show that they're concerned about the stock market. They're theoretically, wink, 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 double wink, supposed to be independent of the stock market. We know they're not, but so they can't be doing that. They can't be doing that. Oh, well, I'm glad to hear that, RJ. Second quarter earnings, we got a lot of earnings today, and now we're focusing on a lot more bluer chip stocks like Disney, McKesson, Equinox, CVS, Shopify. This is going to be very important for consumer discretionary. Monster Beverage, Warner Brothers. I know somebody who owns this company or used to own this company. Petroleum, Oxy's coming out today, could be impacting healthcare stocks. Hilton can impact hotel stocks, and Robinhood could impact financial stocks. I think so too, Tony. I think so too. We got crude oil inventories today. We don't have a lot of reports this week, but we do have crude oil inventories today. This is an interesting report that we do have to pay attention to. Although with all the Middle East nonsense, exactly, Eagle, exactly. With all of this nonsense, it'll be interesting to see. But right now, the Middle East is what's really Penny, that's funny. Yeah, not connected with politics. You're funny, Penny. Good. I'm glad Shop came out with good. That's important. Shopify is it's like a miniature Amazon. That's good. That's good. Good. That's very good for the market. Europe is up. This is very nice. Improved sentiment about the global economy. This is great. Confidence was strained by Bank of Japan. They're not going to take action. That was like a big worrisome. China closed slightly higher. Investors digested mixed bag of trade data. Energy and auto stocks outperformed. Notice, we're not really hearing anything about tech here. We're not hearing anything about tech. Energy and auto stocks outperformed. Customs data revealed on Wednesday that China export growth unexpectedly slowed. They're really doing a great job of balancing U.S. out. We have inflation, they have deflation. It's a perfect mix. Japan closed higher. That's very good for U.S. stocks. Rebounding from earlier losses due to a dovish remark from Japan and yen's weakness, financial stocks led the gains on Wednesday. Japan's central bank will not hike interest rates when markets are unstable. Good. Oh, my dogs are going crazy again. Super micro, 11% down. This could potentially put a little damper in chip stocks recovery, and chip stocks is what started this downturn. ABB is down. I warned you about the stock that a lot of negative things are coming down the pipeline for this stock. About 6 months ago, I talked to you guys about that. ARM, this is a semiconductor stock. So both NVIDIA and ARM had been upgraded. That's very, very good. No, interest rates are not going to go up. They're not going to go up, RJ. They're not going to go up. All right, now that we've done the broad picture, now that we've got the address to the bar, now that we've picked out our clothes, now that we've confirmed that the girl's actually going to be there on time and that she's a girl, and that we found out that she actually speaks English, and we found out that she's not going to bite, now we're going to go to the bar and we're going to try to sit next to her and have a conversation. All right? All right, Thomas. Thank you. So, futures, NASDAQ 100 futures. Futures are up. What is my main concern right now? Well, my main concern is that we're sitting at the 200-day moving average, and after this nasty down trout, even overnight, we have not been able to really move above this area here. That's concerning me. Now, that's very, very concerning because this is a nasty downside move. And if we're sitting right here, and remember something interesting. So far, what we're seeing right now is a reaction from this, okay? Now, if we don't react from this by going up fast, then a couple of more days and we'll have more negative data. Because, look, you have randomly, let's just look at the market randomly. Let's take 20 days, okay? Out of those 20 days, you may have 3 good days. You may have 3 bad days. You may have 5 random days, right? So you're not going to have a bullish day in the market at all days. Just look at this right here. Bearish day, bullish day, bullish day, bullish day, bearish day. So the question you should be asking yourself right now. Thank you, Penny. Thank you for helping. I do appreciate the help. I really do. I could use all the help I can get. So my big concern right now, and the question that here's the question you guys are asking. Roger, is the market going to go higher? And how much higher is it going to go? And here's what I'm telling you. The important question is, will the market start breaking higher and touching the 8-day moving average before we have another down trout? You understand? Eagle says, I do not see us falling below the 200-day. We stay here consolidating too long. I do not see us falling day until we stay here. Well, that's what I'm trying to say, Adam. If we don't go up after a downside, look, the Nasdaq went from 19,700 to 17,400 in 3 days. How much have we recovered of that? We're still in our closing range here. Now, I mean, this is overnight data and we can move higher, but this already takes into account everything I just read. This report takes into account all of the upgrades, all of the downgrades. This is all already, if I'm reading this to you, this is 1,000% priced into the NASDAQ. So the question I'm asking now is, how long are we going to stay at this level before tech starts really moving up? Because if it doesn't, it's going to move down. That's the question. And remember, we're literally at the 200-day moving average. NASDAQ 100, 32% of stocks are trading above the 50-day moving average. 47, we're in a bear market in the NASDAQ. So a question is, Roger, how much longer can we sit here without going higher before the market starts breaking down again? That's what I'm concerned about right now. Because if we don't start breaking above the 8-day EMA, if we don't start coming back to the 100-day moving average, what do you think the market's going to do? We're going to have another couple of down days, and that will again start reverberating the whole global turmoil bullshit. Excuse my French. Would a bear? I don't care about the bear flag, all of that stuff. Forget about all of that. Don't get caught up. Don't get caught up in bear flag, bull flag, a monkey flag. Don't get caught up in all of that. Just stick with the bigger picture. What about S&P 500? Well, S&P 500 bounced hard off the 200-day moving average, but we're pinched. We're in the twilight zone. We're between the 100-day and the 200-day moving average. What does that tell us? That tells us that more likely than not, we're going to continue consolidating. Now, Roger, what if we were doing the same thing above the 50-day moving average? My answer would be completely different, because there's a lot more buying pressure above the 50-day moving average than between the 100-day and the 50-day moving average. A hedge fund would much more likely start buying here than here. Why? Because if they buy here and it goes down, they're going to look like an asshole. Their boss is going to be like, why are you buying below the 50-day moving average? I'm going to fire your ass. So hedge funds, remember, they have to protect their butt. It's much easier for them to justify buying a stock right here than buying a stock right here. Because if a stock is right here and they buy it, all they have to do is tell their boss, the stock was making a new high. It was trading above the 50-day moving average. Why wouldn't I buy it? And what is the boss going to say? You're right. You're right. But if the stock is here, the boss is going to say, why are you buying a stock that's in a downtrend that's below all the major averages? It's called protecting your ass. And here's the other problem. Now, here's where you go a little bit advanced. Okay, guys, let's say we move up today. Let's say today's a really strong day. Okay, what's going to happen? You're going to have to overcome the 100-day moving average. You think the stock market's just going to like butter on no FANG earnings, on no major earnings that happen overnight, just all of a sudden double its value, come up here and start coming up? It would have already happened. So does that mean I'm bearish? No, it means I'm very neutral. I'm very concerned about the market. And more likely than not, what we're going to see is more consolidation. And when you see consolidation, that means the strong stocks are going to get stronger, the weak stocks are going to get weaker, and market is going to be in a wait-and-see mode. Let me add another layer to this. We're also in August, and school doesn't start. School's just started. This is a lull in the market. Thank you, Michael. So do you guys understand why it took me so long to get here? Because if I didn't do any of this, My analysis here would be much more wasteful. And again, look at sectors for less than we have a bear market in the Nasdaq right now. And what about the Nasdaq composite? Is it just in the FANG stocks? No. Look at the Nasdaq composite. It's crappy. Look at the S&P 500, 49%. But this one still looks okay. Look at utilities, the most defensive sector. Now, utilities, 94% above the 200-day moving average, 81. Utilities have to go into the crapper because what will happen? Hey, we're not going in a recession. Okay, let's start buying more speculative stock at the expense of utilities. Utilities going down. Oh, we're really doing good. Let's now aggressively buy those stocks. We're not seeing any of that. And we haven't seen that in the last 2 days. You know how I know that? Look at utilities. Utilities are still above the key moving average. Okay. So to me, let's now go to the cash indexes. To me, and remember, huge earnings are behind us. To me, we're still in the crapper. Now, this is the S&P 500. We are touching the 100-day moving average. We're touching the 100-day moving average. Are we going to break above the moving average? We're already up 1% to touch it. Or are we going to back away? What do I always say? How would this look if it backed away? It would look like a perfect bear market. So nothing yet. Now, if we're up here, it's much more difficult for this to look like a bear market. Although, as long as the lows are getting higher, we're still there. What's the trillion-dollar question? Are we going to go above this price level before negative news comes back to haunt us? See how the question is very different from what you guys think it is? Are we going to go above this price level, the 555 level, before negative news strikes again? Of course, Eagle. Of course. And I'm going to go through them right now. So that's the question. What about QQQ? QQQ is nowhere near the 100-day moving average. It's nowhere near the 8-day EMA. This is overnight data. This is where it is right now. If this thing decides to turn down, we wouldn't even flinch. Oh, we got 500 again. I totally forgot. Thank you, Carlos. Dr. Serino, you're supposed to be the bean counter around here. What's going on? We're relying on you. All right, let's look at intraday levels. Now, I draw these levels for you every single day. Let's do some intraday levels. All right, we're now abutting the 447 level on the QQQ. The next level up is going to be 450. After that, you have a strong resistance at 455. Strong resistance. Unfortunately, Robert, it's a real story. That's the only downside, but thank you. You got to ask the right question. The fun doesn't start, guys. The bull fun doesn't start till we're right here. That's our first bull level. This is our second bull level. All this is just a bounce. Remember I told you we're going to hang out around here for a while? There's a lot of value here. Well, look what we're doing. We're hanging out here. There's not a lot of value here, so it's going to take harder for us to come up here because buying was very directional, very emotional up here, not like here where people just kept buying and selling near the same price level. There we go, Dr. Serena. So again, what am I thinking now? Still in recovery mode. Need to overcome 447, need to overcome 450, need to overcome 455, need to get up to this 460 level. All right. Only 2 likes. I don't know. All right, SPY. Let's look at SPY. And remember, Cam and Gustavo show from 10 to 1 today. How about the SPY? Look at intraday levels on the SPY. Let me even this out a little bit here. We have a crooked line. Here we go. We're literally right at this level right now. 528. The next level is 532. The next level is 538. This is where we start getting into the bull run. Look how much more we have to overcome. We have to overcome all of this to get back into the good graces. Are we going to be in a bull market? I won't know till we're above this level right here. We have a long ways to go. Does that mean the market's going to come back down? That means there's just as good of an odds of the market coming back down, if not more, than the other way. Based on everything I just did right now, there's a 30% chance, maybe a 35% chance the market's going to recover all of this, and there's about a 60 to 65% chance the market will stick around this area. Okay? So again, remember these levels. To the downside, let me give you this level here. And I will be broadcasting this as the day goes on the Telegram channels. Cam, if you don't mind, would you mind posting the free Telegram channel link here for everybody? If you don't mind, if you're still here, Cam. Gustavo, not the premium one, the free one. So right here, I got to get out of here in about 15 minutes. So around here, support right around 511. We're all the way up here right now. There's a good chance we can just consolidate here. We have a long road back here. Look at it this is the daily, long road ahead. Intraday, let's look at intraday. We're right at the upper edge of our range yesterday. We have not broken above that. We can just as easily come down right now because we're going to open up here. We're going to have a big gap. So we can just start filling that gap in. This is where this is what the SPY is going to look like when it opens. We're going to be like around here. We can just as easily go up and we can just as easily come down and start filling the gap. The next level is 532. So we're at 520.29. The downside level is 511. The upside level is 532. The next upside level is right here. 538, 538 and a half. Oh, there's going to be some lovely gap to greens in the next couple of days. Lovely gap to greens. Lovely. We just have to be patient. I did put in 3 long trades yesterday in 3 different services. I don't know if you guys noticed it or not. 2 or 3. So I gave you the levels right here. We got 532. This is the SPY. This is the levels on the SPY. We're at 529. The next level is 533. And the next level is 538. We're going to open right here on the SPY. So you're going to be watching very carefully if we're going to bust through this level or if we're just going to start coming back down and staying with this level. If we stay at this level, then we're going to look like this, just a choppy consolidation mode because there's a lot of value around this area. All right. Dow Jones, let's look at the Dow. Flight to quality, Dow's looking really good. It's only a 0.8. Look at how much more, look at where the Dow is right now in terms of value. The Dow has to go above this level right here. For the Dow to start getting bullish again, we need to trade above 40,100. We're right now at 39,300. The next key level is 39,450. To the downside, it's 39,000. After that, it's about 38,500. Keep your eye on this level. Intraday, again, we're between the 39,460 and between 39,000. There's a chance we could just kind of hover around here. I will be broadcasting this. And Cam or Gustavo, if you have my free Telegram channel link, please post it here. Please don't post the private one. So again, 39,465, 39,400. There you go, Penny. I was just talking about the ones that we put on yesterday. We put on a couple of trades yesterday. Hopefully they'll pop this morning. And we took off a income trade yesterday. The income trade, remember I told you in the weekly cash flow, I'm going to start giving you low risk, high reward. The trade we took off yesterday had a potential profit of 42 cents and a potential loss of 8 cents. Not a potential loss of $5 and a potential gain of 40 cents. Potential gain of 42 cents and a potential loss of 8 cents. Nice way to do income, right? All right, let's talk about stocks that we're looking at. So we're now at the bar. We know the girl. We saw a picture of her. We know she speaks the same language we do. We know she lives within 20 miles, so we can visit her. We know her parents and her brother and her family members are not in prison for serial killing. We like her. We like her. Now the question is, where do we pounce? So let's now go through our stocks so I could show you guys everything. Hey Cam, there you are. Yeah, if you have the link, I don't know if you have it here, but I know I've seen you. Oh, your brother posts it all the time. Sorry, I thought your brother. I confuse you and your brother all the time. No, Christian, I have two telegrams. I have a free telegram and I have a pit telegram. The pit telegram is premium. The free telegram is free for everybody. In the free one, we have about 4,000 people. In the pit, we have 1,035. In the other one, we have 4,363. Wow, we had a lot of subscribers. That's right. All right, so be careful. Be careful today. All right, stocks we're looking at. Let's talk about the short side. I got to get out of here in about 10 minutes. 1 second. Is this helping you guys? Is this helping you guys make money? Is this helping you? Is this helping keeping you out of trouble? All right, stocks to the downside. Albemarle. Merck. And by the way, notice the type of stocks that are breaking down. Merck is a S&P 500 stock. Does this stock look bullish to you? See, if I'm talking about shorting stocks like Merck, you got to ask yourself, how bullish is this market? Seadrill. See how it's close to the 200, but the question is it going to break or is it just going to reverse high, lower? Seadrill. CVX. It probably is going to gap up, come up here, and then touch the 8-day EMA and start coming back down, if I had to guess. Etsy. Good. Exactly, Carlos. Look at this breakdown on Etsy. APA. I gave you the stock a few days ago. UPS is breaking down, not good. Yeah, I'm going to look at sectors in a few minutes. I will. I forgot to do it first, but I'll do it in a minute. UPS. I got carried away, Timothy. But you see, Timothy, those sectors must be pretty important for you. I already talked about momentum levels, but I haven't talked about. But those sectors must be important for you since you're asking for them, aren't they? Aren't they pretty good to look at every day? I'll do that. Just give me a second. I'll finish this. I'll do that. This is STM. Target. Now, folks, Target and Merck are trading below the 200-day moving average. That's not a good sign. That's not a good sign. Wayfair. Remember I told you furniture, all that crap for the furniture coming down. I don't like this company. I don't like them at all. I told you the story I had with them. Great short stock. Let me make a little mark at it. By the way, notice these stocks, for the short side, you want stocks that did not participate in much of the upside in the last 2 days. That's probably the best clue I can give you for short stocks. Stocks that did not move too much to the upside in the last 2 days. If they haven't, those are stocks you should be looking at. Now let me go to the upside. Good. Let me do the upside, Timothy, and then I'll do good. And then I'll do what you're asking for, Timothy, because I agree with you. It is very important. T-Mobile. There are still plenty of beautiful stocks, folks. There are still plenty of great stocks. Stocks that look like this, not stocks that look like Merck. Yep. ZTS. Outside of its range. No negative news from the downdraft we just had. Those are the stocks you want. I mixed this company up with another company that sounds just like it, and the other company is doing this. I think it's VTS or VTA, but I confused the two. But look at this trend. And the fact that you're seeing more volatility means more institutions are trading it. Roger, volatility is becoming too high. Yeah, that means more institutions are interested in it. Isn't that what you want? There's a lot less institutions here than there are right here. Bigger ATR means more institutions. I just gave you guys one of the biggest tips I could have given you. This stock right here, EQR, still moving. GoDaddy. GoDaddy. I gave this, well, it was on my hit list in the pit yesterday. CBOE. This is the long side, yeah. Did it react? Did the market downdraft cause this to go down? No. So what do you think will happen now if the market starts recovering? Boom. Apartment stocks that have to do with apartments. Yeah. And last one, when people are moving, when they're getting ready to buy homes, the public storage facilities start moving. No A-line stocks today, Richard. Not today. I actually gave you guys a real A-line stock yesterday. All right, sectors, utilities, real estate, but not home builders real estate, defensive real estate, apartment buildings real estate, consumer staples. This is where the action is. Healthcare. My three sectors right now: utilities, consumer staples, communication services, and real estate only if it's a real estate stock that looks like the ones I just showed you right now, like MAA, like this. These type of real estate stocks. Don't go bottom picking right now. These type of stocks. You notice technology is no longer here anymore. Starting to come up right now. Technology, semiconductors, consumer discretionary, but we still have a mixed bag. Mixed bag means markets are distorted right now. Retail is down here, energy's down here, small caps are down here, which means interest rates are not biting. Look at small Russell and home builders. You don't want to be in home builders right now. Recession, higher rates. You don't want to be in home builders right now. Fear of recession. You want to be in consumer staples, healthcare, utilities, and partly real estate. I would be very careful. The only reason communications here is because of Meta. If Meta didn't rally, this would be right here along with all of the other ones. So we're starting, the market's bouncing. Tech was right here. Blue chips are right here. Defensive stocks came in, and now speculative stocks are climbing and seeing if they can catch a bid. I thought we did. Hey guys, did we have an A-line stock yesterday or not? I think we did. If not, let me know. But did we have an official A-line stock yesterday? I know I gave 3 stocks yesterday. If not, maybe I'll give you guys one today. But we should have a gap to green and we should have an A-line if not. Just let me know. So again, going back to market, folks, listen and listen good. Only 39% of stocks are trading above the 50-day moving average. Eagle says yes. Bill says no. Did I or did I not give an A-line stock yesterday? It should be no. Okay. Dave says yes. Tom says no. Guys, did I or didn't I? It should be in the members area. We can't have I didn't give half of you a stock and half of you I didn't. No. Official. Did I give you an official A-line stock yesterday? That's the only question I have. Okay. Thank you, Carlos. Thanks. Yes, no, yes. No, I'm talking about official in the members area. In the members area. I don't think I did, so I will give you one. Okay, all right. Not just this room. Okay, that's not an official. In the pit, I give you a lot of unofficial stuff. Here, I give you unofficial. So, guys, only 50% of stocks are trading above the 200-day moving average. That's not official trades, guys. If I give you stuff here, those are not official trades. Those are just stocks to add to my watch list. Official means, folks, in the pit, in the Telegram channel, there's an official A-line trade. Thank you. Carrie got it right. We had Stealth, Pattern Trader, and Bargain Hunter. So I have to give you one this week. I will. And I have to give you a gap to green this week, and I have to give you another weekly cash flow because I'm a nice guy. Look. 50% of stocks are trading above the 200-day moving average. The market is extremely vulnerable right now. Please, thank you, Steve. I got it. We're all on the same page. Thanks, Brian. Thank you. If I give you guys something here, that's not a real A-line official stock. That's just a stock that fits our A-line scanner, okay? And like I give you watch list stocks here for my momentum, so I'm also giving you some A-line. But the only A-line stocks you're going to get official with entry, exit option, with the caviar, with the sushi, with the lobster rolls, with all the accoutrements is going to be in the A-line program. Okay, so these are just A-line watch list stocks. But let's go back here, folks. We're starting to get a little bit speculative. Tech stocks are doing this right now. Is it time to stick my head out? Basically, we had a huge storm. We don't know if the storm is over. Some speculative stocks are starting to do this, and they're lifting their head out of the hole about this much. Their body is not halfway out of the hole yet. They're doing this right now. Defensive stocks are still rocking and rolling, and Dow stocks are in between. So we went from speculative stocks leading to speculative stocks taking a backseat to interest rate sensitive stocks, interest rates and speculative stocks taking a backseat to defensive stocks. And now defensive stocks are still leading, but all those other stocks are starting to do this. They're starting to kind of peek to see if the coast is clear. I hope you guys have a good understanding of where we're at today. I've been going 60 minutes straight. I will see you in my VIP room at noon, and I'll see you in my class, my seasonality class, where I'll be giving you guys some ticker symbols for the bullish phase that's about to begin, and maybe a bearish phase. That's happening at 1 p.m. That's red meat right there. And then join me for the VIP room where we get to go through the second half of the day, and I give you guys options for stocks that I like and a new watch list for the second half of the day. I'll see you guys later. I hope you guys have a great day. This is the third day in a row we're breaking the 500 number. Bye, guys. If you have any questions, Roger at rogerscott.com. Cam and Gustavo show from 10 a.m. to 1 p.m. I'll see you guys around. Bye. Have a great day, everybody. Stay out of trouble and be careful. Don't go loading things up right now.